What's up, guys? My name is Tai Zen. Welcome to the cryptocurrency.market channel. This is a real-world, reality-based trading, investing, and entrepreneurship channel. This is not a channel that talks about fantasy trading and bullshit technical analysis that people don't ever put money on. In this channel, we talk about the stuff that we use and that our clients use to manage 7, 8, and 9-figure portfolios. So in this video, guys, I want to talk about how we use the Bitcoin Dominance Index. Some people call it the Bitcoin Dominance Index. Some people call it the Bitcoin Dominance Percentage. Some people call it the Bitcoin Dominance Number. It doesn't really matter what you call it. If you guys follow me here and go to coinmarketcap.com and look at the top right. So CoinMarketCap lists the 2,800 and so cryptocurrencies that can be traded on some type of exchange. There are other more cryptocurrencies out there, but they are not able to be traded on an exchange, so CoinMarketCap does not list them, okay? And we do not focus on any coins that are not listed on an exchange, okay? So if you guys look over here, you'll see that the total market cap of the entire market is 271 billion. And what that basically, that number is that it takes the number of coins that's available and multiplies it by the number of circulating coins on the market, the value of each coin, and that's how they come up with that. And out of that 271 billion, let me go ahead and refresh this. Out of that 271 billion market cap right there, 183 billion of it belongs to Bitcoin. And since Bitcoin was the first cryptocurrency on the planet and the original cryptocurrency, right, it has the biggest following at the moment and has the most users, transactions, and things like that. So because of that, there's this number here that CoinMarketCap put called the Bitcoin Dominance Percentage. So basically, if we take the number of Bitcoins here, the market cap of Bitcoin, which is, let's just say 183 billion, and we divide that by the 271 billion up there, then we get a 67% right there dominance, which means the word dominance simply means that that the makeup, okay, out of the 271 billion market cap, or the value of the entire cryptocurrency market, basically this number just tells us that Bitcoin makes up 67% of it, okay? So the reason why, let me go ahead and click on this number here, and then we are going to the page that actually has the Bitcoin dominance, okay? So now there's no technical analysis tools on this page. So what I did was I took a photo of it and I drew out some charts, some trend analysis lines like this previously, and I posted it on Twitter here on August the 5th, okay? So can you guys go in there to the other room, guys? I'm shooting a video here, guys. Like always, when I'm shooting a video, I need you guys to keep it quiet, okay? So when you guys see here on August the 5th, right here, let me just enlarge this a little bit so you guys can see it easily. On August the 5th, right here, I posted this, right? I saw that the Bitcoin dominance was coming up into this area here at point A, right? And I said that folks keep asking me when altcoins start going up. And I said that I expect alts will go up briefly, key word here, guys, briefly, at point A around the 70% percentage point, which is right around this point A in the yellow right here. And then based on the green trend channel. So I'm looking at the short-term green trend channel here, or the intermediate term. I'm not looking at the long-term trend channel, which is marked in red, okay? And I said that, but big altcoin moves like in 27 won't likely begin until 80% at point B, okay, based on the green and red trend channel confluence, okay? So I said a lot here, so let me explain this. I said that on the intermediate term green trend channel right here. Let me just blow that up. Okay, I said that I expect that when the price goes up to here, that it's going to fall back down. Okay, temporarily probably to this green uptrend channel right here, and then after that it's going to go up to here and then pull back down, and I expect it to go from there down to C. Obviously there's going to be some trouble getting past the confluence here of this green line and this red line. Okay, can you close that door for me, man? And the reason, just so you guys know, a confluence means intersection, okay? But the way that it's used in trading is slightly different. Confluence is not just an intersection. It means that it's the intersection of two technical analysis tools, or I shouldn't say two, but confluence means con means together, fluence means where they intersect, okay? So it basically means an area where two or more technical analysis tools intersect each other. Okay, so this green uptrend channel right here intersects right there, and it also intersects right there, and it also intersects right there. So any area where more than one technical analysis tools intersect each other, or they happen in the same area, we call that an area of confluence in English. Okay. For any of you guys that don't speak English as your primary language, okay? So I drew this out on August 5th, as you guys can see here, and now it's September 18th, so it's more than a month, okay? So what I'm going to do is I'm going to head and redraw all these lines again, right? I took a picture of it. I went and took a picture here, and then I drew it out over here. And let's take a look at this, okay? So when we look at this, hey guys, can you close the door for me, guys? When we look at this, guys, if you notice, there's more granularity, okay? The lines here are much more finer than in the previous photo that I posted, okay? So if you guys notice here, notice how the lines are not as like jagged, they're much smoother. I don't know why, but I think that CoinMarketCap must have done something with their data, so it's more accurate, it's more granular, it appears. But either way, we're going to take a look at it. It's still the same, all right? So this area here, it's coming to this area A, same area, right there. And you'll notice that in this area A, in this area of confluence at point A right there, notice that the line is starting to come down. In other words, if we look at here, where you start to see that it's starting to curve, there's a curve down, okay? So I'm expecting this to come down. That means that there's two things that can happen here. One is that the value of Bitcoin can stay the same, and then the value of the altcoins will go up, okay? Now, if altcoins go up, then the dominance increases for the altcoins, and that will force the dominance number here to come down on Bitcoin, okay? The other thing that can happen is that Bitcoin continues to go up in price, which continues to increase its dominance. However, it's going to do it at a slower pace compared to all the altcoins combined, and when all the altcoins combined go up, then what happens is that it'll force the Bitcoin dominance number percentage to come down to here, okay? So let me see here. Let me just magnify this area here a little bit, okay? So I anticipate it's going to come down to here, right? Now, one thing people always ask me when I'm making these videos about doing technical analysis, they always ask me like, hey, why do I draw the trend lines here, right? How come I don't draw it up here way at the top like the traditional people say it, like, you know, touch 2 points or 3 points way at the top? The reason why I don't do that is because I was taught by a really good trader in America who taught me how to use what's called the majority touch rules. So I do it where the majority of the points, the open, high, low, and closing prices touch. So I tend to have it something like that. Okay, the trend channels that I draw are based on where I see the majority of the action is taking place. Therefore, I am not doing it like this. Okay, I'm not drawing this channel down here at the bottom here. Now, if that's how you do it, then there's nothing wrong with that. Okay, I just from my trading experience, I like to know where the majority of the action is taking place. I really don't care if it's the exact place like in the traditional technical analysis. Remember, most of all your traditional technical analysis was done before computers were invented and people had to draw charts by hand. Now that all the traders use computer-generated price charts and graphs and things like that, it's a lot different, and so I want to adapt to the current trend and the current times in trading, and that's the reason why I don't draw the trend channels the way the traditional traders do it. Okay, same thing here. That's why you see a little bit poking through there, and a little bit poking through the top, and that's okay. Now, the reason why I drew it here, the bottom here, is that I noticed that it's touching here. The majority of it's touching here. The majority of it's touching there and there. And what I did was I copy and pasted this green line and drew it on the other side. And when I did, I lined it up to where it touched down here. So there's an area of confluence there. And if you look really closely as I zoom in, you'll notice that as the price comes down and it comes back up, it's retesting that area right there, right? It comes over here, it touches this, and then now if you zoom in really, really good, you'll see that it's touched up here and tried it again, and then it failed, and then now it's coming back down. Okay, so that's what I'm seeing here. And let me go and back over here to the charts over here, and that's a quick way to look at it, is to look at this, guys. Now I want to come over here to Trading View, all right? And over here on Trading View, if you go into the symbol up here and you type in this symbol, which is BTC.D, as you can see there, that stands for the market cap of dominance of Bitcoin, and you can also see the name of it right there, all right? So the first thing I like to do is, when I like to look at this chart, I want to clear out everything on the other side, and I want to come up here and look at a weekly price chart of this. Or this is not necessarily the price chart, but the right there. So what I see is this. Remember, we are trend traders. We are not scalpers. We do extremely very little day trading, because day trading is not something that is scalable when you get into the 7, 8, 9-figure portfolios. So that's not something that we recommend that people do, especially if you are a beginner. We do not recommend that. We recommend focusing on being a trend trader, where you take a small risk, a small portion of your money, and take a bet that this is going to go in this trend and continue to ride it out. Okay? And normally what we try to do is take profits at the top of the trend channel, right? And then buy back in whenever it's on the other side of the trend channel. All right? So if we draw the trend channel here, right, like that, let me just do this, guys. Some people traditionally, the traditional chartists or the traditional technical analysts, they will draw it like this, okay, and then leave it like something like this. And they would say, oh, there's not another point up here, so that's not really a trend channel. And then some people would say, oh, let me just do it right here, right, among these, the top of these high prices here, and then touching those two, all right? For me, I'm not going to get all detailed into that. All I need to know is that, hey, it's somewhere along there, okay? That's where most of the action is taking place. I really don't care about the tails that stick out or the wicks that stick up past the trend channel like that. The reason is that could just be one Satoshi or two Satoshi or one coin or two coins. There's a lot of shenanigans that can go into play with that and down here too. So that's why I don't pay attention to that much. What I want to know is where's the majority of the action happening. And if I look at this, the majority of the action is happening between those two trend lines right there. Now, as it's going up here, right, let's just take a look at this, guys. Let me see if I can draw a, let me see if this will work. Okay, I want you guys to notice this, right? From the bottom down here to the top of here, right? Let me just change the color of that so you guys can see it easier. Right there. Notice how this, notice two things. I want you guys to notice the distance, okay, that this travels from top to bottom. All right. Notice the distance from the bottom when it launches all the way to the top, and then notice this from here all the way up to here, and then I'm going to copy and paste it again, and then do another one right here. It doesn't have to be perfect, guys, just so you guys know that. And then we're going to do another one right here. Okay. Now, here's something tricky, guys. If I do that, right, it seems like this distance is getting longer, but actually it's not. And I'll show you guys why in a minute. Okay. Right there. Notice how it's been shortened. Okay. All right. Notice how it's been shortened right here. A few things. We can look at it like this, or we can look at it like this. Now, either way, right? Either way, if, let's just say that before this all happened, that's all you had. That's all the data that you had, right? Then obviously you would draw this trend channel somewhere in here. I would draw it somewhere in there. Okay, so when this came up and it came back down, not a big deal. Then it came up to here, and I saw that, not a big deal, right? And then now it pokes through, right? Now once it pokes through like that, then that's when I can adapt and readjust my trend channel because I have new market data now, right? So, and also keep in mind this, guys. Keep in mind that when I had the trend channel right here, when this broke through this area right here, when this broke through, I'm expecting it to keep going. If that's true, if it's a true breakout, then this should continue going. However, it's very unlikely it's going to break through because if we look at this right here, there's a huge area of resistance right here where the price collapsed all the way down to here, right? From 70% up here all the way down to here, to 35%, to somewhere around in the low 30s or mid 30s, right? So I would expect that this would crash, but I was wrong and it went through, and since it went through, it should keep going. However, if we look, right, we notice that it comes up to here and it did not drastically, it didn't have like one of these long green bodies as it breaks through, okay? It pulled back, so now we have to readjust and update our trend channel and bring it up to here, right? Somewhere around there. And so now I'm thinking, okay, if it's going to break through, it needs to break through, right? But however, there's going to be huge levels of resistance right here at this area right around here. That's going to have a huge area of resistance right there. All right? Right there. So that's going to be a tough part. You know, it might have made it through this one, but I seriously doubt it's going to make it through here or in this area right here, right? It's going to have to pull back a little bit before it goes through that, all right? So when we look at it through here, now it's falling through, okay? So that's what I see right now, right, is that the momentum coming back up and the amount of energy that's coming up, all right? Now, you guys hear me say the word momentum, and you guys hear people talking about momentum in trading, and the best way for me to explain this to you guys so that you guys can understand the momentum in price movement is imagine that you are driving a car at 100 miles an hour or 100 kilometers an hour. Either one, it doesn't really matter. If you live in a country that uses miles, then go with that. If you live in a country that goes with kilometers, like I am right now in Vietnam, then just go with that. Imagine if you were going at 100 kilometers an hour, right? And you keep going, and you step on the gas, and the car keeps going, and it continues to go, right? Now, right here, it's doing the same thing. You're stepping on the gas, and the car keeps going, but notice that at some point, when you drive the car, if you don't stop to get more fuel, or more gasoline, or more petrol, then what happens is, it's going to run out. Now, is it possible that the car can run out of gas, or run out of fuel, but the car keep moving? Okay, if you're on a expressway or a high-speed highway, you know, then the car will continue going at 100 kilometers an hour or 100 miles an hour, but it's not going to stop right away just because your vehicle runs out of gas. And so it's going real fast, and then it has to slowly slow down, right? It slows down. There's no more engine to push the car to go forward at 100 miles or 100 kilometers an hour. However, there's still inertia, and I don't know the physics of it, but there's still a lot of energy in the car, and it keeps on going, okay? And then at some point, it's going to slow down to where it just stops because there's no more momentum, or there's no more inertia, or there's no more physics, or whatever you want to call it, behind the car, okay? The correct terminology, I don't know, but I do know that the car is going to slow down, and you guys know that also, right? So this is what we see here, guys. What we see here is that these blue arrows, right, show that there's a decline in energy, there's a decline in momentum, there's a decline in force, there's a decline in the ability for the price to keep going up. So how else do we know that, okay? If we move these blue arrows aside, right, we also see this, okay? We also see this, guys, and I want you guys to pay attention to this. We also see this. We also see that the distance between, look how long these green candles are. They're long. They have very long bodies. And then when they come over here, the bodies are even longer. And over here, they get longer. And over here, now they get shorter. Not only is the from the low to the high getting shorter, but it's also the bodies are getting shorter of each candle. Okay, so if I switch this, remember how I said that from here to here, from here to here, right? And then from here to here, right? The distance is getting shorter. Now, you might not see that this is slowing down right here because all you see is green candles. But let me switch it to a daily chart and fine tune it so that the resolution is a lot higher, okay? And then you guys will see what I'm talking about. All right, now when we come over here, we're going to right click and reset the chart so that it's in the proper, okay, my power just got cut off at the apartment here. I'm not sure what it is. So hopefully I finish this before the computer dies, okay? So we can look at this and go back in history over here and see how all this stuff did, guys. But I'm not going to be able to do that because the internet is cut off at my house because the power's out, right? And it's not really that important anyway to see what the previous, you guys already know what it looks like. What I want you guys to see is this, okay? What I want you guys to see is this right here, from here, okay? So Bitcoin started climbing up, right, from around the highs from over here, and then it started to come down, and then this is when it started to launch back up again, right? So if you guys notice, these blue, right, this right here is the move from here to here, and then this right here is actually just from here to here. See that? It's not as what do you call that? It's not as long as we thought it was, okay? And then this is actually from down here to here, okay? And then if we copy and paste it, we can see that the distance goes from here to about right there, okay? So notice that, okay? Now, also notice this, guys. If we do it from here, we see that it's cut off from about right there, okay? Now, I want you guys to notice something, okay? Whenever you guys have, I'm going to borrow this line right here. Whenever you guys have a horizontal, this right here, guys, is not a healthy trend, okay? When something's flat at 0 degrees like that, that is not a healthy trend, okay? Whenever something is at a 90 degrees, that's not a healthy trend either. Let me just draw this over here. I just want to remind you, I know I've said this before in previous videos, but I just want to remind you guys again, right? An ideal trend that's healthy, that we want, is like from about that degree right there, probably somewhere around 30 degrees, 25, 30 degrees, to somewhere in this range right here, okay? We want it in that area, okay? And let me just highlight that in green right there. That's what we want, guys, right? Let's just say this. Let's just say this in green. And then this right here, guys, would be like in the red. That would not be good. That's not good, and this is not good either, okay? So a healthy trend, we want it somewhere in that area, in that region. It doesn't have to be perfect, guys. You don't have to take out a ruler and measure, is this exactly 25 degrees, or is this 30 degrees? Is this, 70 degrees or 72 degrees? It's in that picture, okay? I know some of you guys are engineers and you want to bust out, with your pocket protectors and your protractors and your compasses and measure the exact angle of this. You don't have to, guys. You can just look at the picture and tell that you don't want to be close to 0 degrees and you don't want to be close to 90 degrees, all right? You want to be somewhere right here to where it's, in this area is healthy. Now, the best area, the best trend is actually this right here. The most perfect trend that we want, right, is about right there. We want something like that at about 45 degrees. That you can bet on that, like 40, 45, 50 degrees, somewhere around there. The reason why I say that this is the best is because it has the potential to last the longest, okay? Now, this right here will not last that long when it's that height, and this right here definitely will not last that long. It won't stay there for a little brief moment of time. So the ideal trend angle, or I think in math, the correct term for it is the pitch, right? Now, you guys know that I'm not good in math and science, right? So that's why I'm visual, and that's why I'm sharing with you guys that this is the angle in which you guys want the trend, or we all want the trend, okay? Now, I want you guys to notice this, okay? Now that you guys understand what angle or what pitch is healthy for a healthy price trend, right? Then what we want to look at is this. If you guys notice here, right, in this, right, from here to here, that's about somewhere in between this area right here, right? So that's okay. That's okay. And then now it starts to go higher. See the pitch? So we're going from this, and now we're basically going steeper and steeper, okay? So in English, steeper means that it's becoming more and more straight, okay? For anyone that's not speaking English as their primary language, all right? So, and then you notice that after this one, right, it never got to the point like this, all right? It started to come up this way, right? Like that. If you want to see it, it looks like this, right? From there, and then notice how it goes from there to straight, and then it goes even straighter. Like this is actually from here to here. And then notice how from here, about right here, it just pretty much goes straight like that. Okay, so what we have here is a situation where the market is going up like this. It's going up like this, up to about the point right here, to about for just a very brief period of time, for like a couple of days, right? And then instead of just collapsing all the way, what it did was it started to reverse and the trend started coming down. So the trend got weaker. So right around here is when we started to realize that, hey, you know what? We step on the gas on the car, but the car is not accelerating anymore. The velocity or the speed of the car is still fairly the same. And then by the time we got up here, the trend has fallen here. And then up here, right, there's a few drops of gasoline still left in the fuel line. So we're able to push it just a little bit higher, right? But then immediately afterwards, we realize that there's no more gas, and then it starts to fall, all right? And then that's where it's at right here. And when it starts to come down like this, right, it gets weaker and weaker. And now it finally hits here, and then it reverses, all right? So that's how you read the price action on this, okay? And we're doing it on the Bitcoin dominance, guys, but it doesn't really matter. You guys can read this on the price of oil, the price of a stock, the price of a currency, the price of gold. Anything that can be charted in the form of candlesticks can be put in this particular manner, okay? Can be analyzed in this particular manner, all right? So what I see here is that it's dying down, and then that's my first clue. My first clue is that I'm looking at the angle in which the dominance is climbing up, and I see that it's losing energy. The second clue that I have is this, right? Is that, if you guys hear that noise in the background, by the way, all that noise, that random noise in the background, that's my housekeeper. She's cleaning around me while I'm doing the, what do you call this? While I'm doing this recording. So right here, we see that if we move these blue arrows out of the way, we notice that as the price goes up, it falls back down. And then it tries to go higher, right? It goes higher. Let me see here. The first clue is that pitch or the angle, right, of the trend is changing, right? Number two is that the prices, right, I mentioned to you earlier, the length of the bodies of the candles are getting shorter and shorter, okay? So I can say that candle bodies are getting shorter and shorter. Okay? Hey guys, close the door. Right? And then the other thing that we're looking at, guys, is the unable to attain higher highs, right? So right here, it's got, this is a high, and it goes up, and it gets a high, and then right here, it's not able to get a higher high, it's not able to get a higher high, it's not able to get a higher high. It got a little bit right here, but it was so weak, it just fell right back, and then it tried to get a higher high right here, and it can't do that, okay? So, right there, and then it collapses back down, all right? So, unable to attain higher highs, okay, is the area here. The fourth clue that lets me know that there's a possibility that the trend is reversing or is changing is what's called a shooting star reversal pattern. And you won't see it on the daily chart, but when you go to the weekly chart, you'll see it right here. Let me move this line out the way and enhance this a little bit. If you guys look right here, you'll see that that is a classic, traditional, classic shooting star pattern. And what this means is that what this is telling us is that all the sellers tried to push the price, all the buyers tried to push the price up, but the sellers came in and pushed it down, and that's why there's no tail at the bottom. There's only a long wick, and the longer the wick is, the better it is. Now, let's take a look at an example over here of another shooting star pattern and what happened with it in the past. This one here is a stronger shooting star pattern right there. So that's why this thing reverse right here, and that's a good sign, okay? So that's a good sign. When I say it's a good sign, it's what you want to see ideally in a perfect world. That's what you want to see when there's a trend reversal or when the trend stops, okay? Now, in traditional technical analysis, they'll look at the shooting stars reversal patterns as a reversal pattern, but as you can see here, it was a reversal direction for a week or two, and then it just went sideways, and then it went back up. So for me, the shooting star pattern is not just used as a reversal pattern, but it can be also be an indicator or a signal that the market is just not going to continue in that same direction. It could go in a reversal, or it could just go sideways. All right. So that's the other clue that I'm looking at. Now, the last clue that I want to share with you, but it's not completely clear yet, is what's called lower lows. Okay. So if you guys notice here, right, this is called a, see how this red candle just broke the bottom of this area right here? That's what we call breaking a lower low. Okay, so that's a low right there, and it just broke it. Now, we want to see it break the bottom of that wick, obviously, and if it can break below the low of this area right here, then we got a very good shot that the dominance is going to come down here to the other side of the trend channel, and I would anticipate that it's probably going to be in the low 60s by the time it comes to this side of the trend channel. Maybe 62, 63, 61%, somewhere to the mid to the low 60% range, all right? So before, and then once it gets here, it could break through or it could go back up. But I'm looking at this as an intermediate term area right here. Now, the question that I always get asked, or I always ask, when I see people doing this type of technical analysis is, I want to know, man, are you buying, are you selling, or are you holding, or are you staying out? Okay? Because there's only 4 things that we can do. Okay? 4 actions that someone can do in the markets. All right? And those 4 actions are, number 1, right? Buy. Number 2, sell. Number 3, hold. Or number 4, stay out. Okay? Just stay out of the way. Don't do nothing. Wait for the signals to let you know one of the other 3. Okay? So those are the 4 actions that someone can do in the markets. So what is the action that we need to do here? What is the action that I need to do here with my portfolio? Okay? So let me give you guys a few examples of what I'm going to do, right? And then that way you guys will know. Okay? From here until here, I can tell you right now, on all my coins, I am going to just hold. Okay? The coins I already have, I'm going to hold. I'm not going to do anything. The coins that I don't have, I'm going to stay out. If I don't have that coin, then I'm going to stay out. I'm not going to do anything. Okay? So if I don't have that coin that I want in my portfolio right now, then I'm going to stay out. But if I am new to the cryptocurrency market and I have not bought the coins yet, right? Then right now I would be buying the altcoins. I would be looking for quality altcoins to buy. Okay? My personal favorite altcoin right now that I believe is going to have big potential in the future is Tezos. If you don't know why or don't know about it, go look at the video that I've previously made a few weeks ago, where I talked about the 8 reasons why I'm buying the shit out of Tezos. Okay, so if nothing else, I would get like the top quality coins that are the top quality altcoins, like Tezos, like Litecoin, like what else? Oh, Bitcoin Cash, Bitcoin SV, you know, all Ethereum, all the big players. Okay, I would focus on the coins that have a lot of money to develop the project. Now, many of you guys know that I recently made a video where I called out the founder of Litecoin a piece of shit hypocrite, you know, for calling the Ethereum-based coins shit coins and the Ethereum network a shit coin, and then turn around and him and his buddies pushing $1.4 million into the INX token, which is based on the Ethereum network. You know, to me, that's being hypocritical. But despite that, right, I still invest in Litecoin because I know that there's a bunch of people out there that think it's a quality coin. They're not aware of the hypocritical piece of shit that Charlie Lee is doing. So there's still a lot of potential for it to go up. Okay. Now, when it goes up later on, when it goes up some more, I will definitely be looking to sell a little bit of it. You know, because not because he's a piece of shit hypocrite, but because he has stated in some text messages in the Telegram chats or somewhere where he said that there's no development on Litecoin. So that's the reason, okay? In the short term, there's still some profit potential, but over the long term, like 5-10 years, I don't see it being able to go anywhere simply because it doesn't have any development on it, all right? So those are the different scenarios where I would buy, sell, hold, or stay out, okay? Now, I want to look at something else here, okay? Here's a few more examples, okay? What someone needs to do in each scenario is different, okay? Let's look at Bitcoin Cash. Here's the trend analysis of Bitcoin Cash right there, okay? There's my trend analysis. So here's what I would do, okay? Here's what I would do. This is probably one of the better examples here, okay? Right there. So as this is going up, as you guys can see, it's coming up to the other side of the trend channel, right? So what I want to do is, what I want to see is this. I want to see the Bitcoin dominance, right? When it drops to here and it comes down to this bottom of the trend line, right, the green trend line, then there's a good chance that it's going to go back up. There's a chance. I'm not saying it will, but there's a chance, right? So what I'm going to do is, as this is coming down towards the green trend line, and as this is going up towards this, I'm going to time it so that as it's coming up near this area, I'm going to sell some to take profits, if I need to take profits, okay? If I need to take profits. If I don't need to take profits, then I'm going to continue holding on it for the long term. But if for some reason I need to take profits on Bitcoin Cash, then I will sell it as it's coming in here, okay? So now take a look at this, guys, right? There's no perfect, there's no such thing as being perfect, okay, guys? So if we look at this, you guys know my 1/3 rule, okay? You guys know my 1/3 rule, right? So it launched from about here. The launch of this move is about right there, from there, okay? So I'm going to measure it like this, okay? I'm going to measure it from there, from the bottom of this to where the trend channel is at, and what I'm going to do is I'm going to copy it and paste it, okay? I'm going to copy this and paste it and use my 1/3 rule, okay? So right there, okay? Once it comes up to here, to about the middle third right there, I'm gonna start getting ready. Mentally, I'm getting ready, okay? And then by the time it gets into this area, this is the area in which I would sell it, okay? If I need to sell this, I would sell it in this area, this top third right here. It's not gonna be perfect, guys. Don't wait for this. If I need to sell this, I'm not gonna wait until the candle touches the other side of the trend channel, okay? That's not how it works. I would sell it in this top third, so I would start moving it to the exchange out of the hardware wallets and into the exchange around this area. And then the minute it pops up, I'm going to start selling, and sell a little bit, all the way up into here. And if it breaks through, it's fine, okay? But that way, I sell right there. It's easier to sell a little bit at a time and can be able to do it emotionally than to be able to just sell it all in one chunk and run it all the way up. Okay, in one chunk. Okay, so if you need to sell, like, let's say a few $100, it's not a big deal to sell at one time. But if you need to sell, like, let's say $100,000 or $500,000 or $1 million worth of Bitcoin Cash, you're not going to be able to just do it in one chunk. So you start moving a portion of it into the exchange and start selling. Sell a little bit, move the money into your bank account, right, or into Bitcoin or whatever other currency that you need, or ethers or whatever you need, and then load up some more into the exchange, sell a little bit of it, get it off the exchange, and then move some more coins into the exchange, sell it. So I'm doing that all the way up in here, okay? So that's what we call sell into strength. Selling into strength, that's what it's called, okay? Now, let's come over here to another, I want to give an example of a staking coin here, right? Let's look at Tezos, okay? So Tezos is, here's the trend, right? The next big resistance level is going to be around here somewhere, right? All right, so here's Tezos, okay? Let me close this so you guys see more of it. So here's Tezos, right? Now, as the price goes up from here, right, I'm not selling the original supply of Tezos that I own. What I want to sell to fit my financial goals, okay? This is not your financial goals. This is my and my family's financial goals. Is I'm going to sell some of the Tezos at the end of each month to pay for bills, and even if I don't need to pay the bills, I just want to take the profits out into fiat currency. Remember, don't let the stupid ass Bitcoin maximalist retards tell you that value your wealth in Bitcoins, okay? Do not value your wealth in Bitcoins. Value your wealth in the currency that you need to use to pay your bills, buy your food, pay hospital bills, and things like that, and pay your car payments, pay your house payments with. For me, it's in US dollars and in the Vietnamese dong. So for me, taking profits and valuing my wealth is going to be in the US dollar and in the Vietnamese dong. Oh, and also in the Thai baht, okay, that's used in Thailand. So when I go to Bangkok, I have currencies to use over there, okay? So I never, ever, ever value my wealth in Bitcoins. That is like the dumbest shit I've ever heard, okay? The smart thing to do is value your wealth in the currency that you actually pay your bills with, okay? Or to put it in a fiat currency that has a stronger chance of maintaining its value, okay? People say that, oh, the US dollar is going down in value, it's losing, 2 or 3, 4% each year. That's okay. The Vietnamese dong is the same way. However, I would rather have something that loses 2, 3, 4% each year that pays my bills than to have something that could potentially lose 50 or 90%, okay, in a few weeks or a few months, all right? So just think about that for a minute and don't let the stupid ass Bitcoin maximalist retards that don't trade for a living tell you otherwise, okay? So here's what I'm doing. Like, so far as the price has been going down, I have not sold any of the Tezos that I have staked at the end of each month. So I haven't sold any of it, okay? However, with the Bitcoin dominance the way it is, if it continues to fall down to here to the green line, then what I'm going to do is I'm going to wait. And if the price of Tezos, these two things have to happen. First is that the Bitcoin dominance has to go down and hit the bottom of that trend line. And on the way down there, and as this is going up, then that's when I will start selling, okay? And like always, right, let me move some of these, let me draw this in. I'm not one of those Asian guys that's good in math and science, like many of you guys that's watching my channel. I know the majority of you guys are engineers, architects, and professionals out there. And most of you guys make over six-figure income. I know that from the Twitter analytics and the Google analytics, right? So I know you guys got college degrees, math degrees, and science degrees, and all that stuff, I don't, okay? So I have to go with the level of math and science that I know, which is I can draw a box and divide it and multiply it by 3 times. So there it is, guys. So when the price of Tezos starts to come up here into this area, into this third quadrant on top, then what happens is I'm going to start moving some of the coins at the end of what do you call that? At the end of the month, okay? So let me just write this down here, okay? So you guys can see what I'm talking about, all right? So criteria to sell my Tezos staking rewards, okay? And this could be any coin, guys. I'm just using Tezos as an example here, right? So the first criteria is that Bitcoin dominance drops to bottom of green trend channel, right? Number two is that Tezos price goes up to top of daily trend channel, right? And then third, right? So it has to come up to here, okay? It has to be in those two areas, all right? And it has to come down to here, okay? So that would put it at like around $2, okay? That would put $2. And let me see here, where's the notepad, right? And if I need the money at that time, okay? That's important. If I don't need the money at that time for any reason, then I'll just continue putting it back in and continue staking it, right? And then let my Tezos supply continue to grow, all right? Like I've been doing for the last few months, okay? So that's how I would use this Bitcoin dominance, okay? Now, once it gets here, if it breaks through, then I'm expecting it to come down to this red trend channel, guys, trend line. If it doesn't, it continues going up, then I anticipate that it will come up to here. Now, the likelihood that this is going to break through, guys, is very, very slim. There's too many crypto projects right now on the market to allow that to happen, guys. Okay, the stupid ass Bitcoin maximalist retards, they'll tell you otherwise. But I'm telling you, like there's so many coins here, like Ethereum, there's Ripple, there's Bitcoin Cash, there's Litecoin, there's EOS, there's Binance Coin, Bitcoin SV, Stellar, Cardano. All these coins, guys, right? All these coins, there's so many of them that have an opportunity, right, to go up that I don't see. It's really hard for me to see Bitcoin's dominance going up here. So right here at 70%, right here at 80%, like I mentioned here, 70%, 80%, those are the numbers that I'm looking at where the Bitcoin dominance is going to reverse. And I honestly believe that once it reverses and Bitcoin's dominance comes down here to the bottom of the trend channel, that might be the last time that it ever is at the top again. Okay, because there's just too many coins on the market, guys, right? Oh, and by the way, you guys see how Ripple went up 16%? Okay, look at that. Look at all the stupid ass Bitcoin maximalist retards that tell you, not to get into Ripple. And imagine all the people who got into Ripple and made 16% in the last like 48 hours. Imagine how they feel. All right, so be careful about who you listen to, guys, out there, okay? Stay safe. Stellar went up. Let me just go ahead and sort this real quick just to take a look at a few of these, okay? So Ripple, one of the major coins that went up 16%, 15%. People are worried about if Ripple is centralized or decentralized. Like, why the hell are you worried about that dumb shit for? You should be worried about making profits, That's what cracks me up, is these people that, are worried about everything except making profits to take care of their family, okay? So I got Ripple, I got Stellar, I got Tezos, Ravencoin, Tron, 0x, Qtum, Icon, IOTA, Cardano, Ethereum, Dogecoin. I think I got some Omisego. I think I might have some of those, a small amount. Definitely got some Neo, right? I think I got a small bit of Binance Coin. I definitely got some Zcash. That was one of my biggest mistakes there. I did not get into NEM early on. I had a bunch of it, and then I got rid of it. That was my mistake. Bitcoin Cash, definitely. I got some Sia Coin, Bitcoin SV. What else? I still got my Verge from back in 2017. Dumped all my BitShares. That I don't believe that's going to go anywhere. That shit is so goddamn confusing. I don't know. I've been in crypto for 7 years, and every time I look at their platform, it's confusing as shit. And those engineers, they just don't get it. If the shit is confusing, ain't nobody going to use it. Okay? If it's confusing, ain't nobody gonna use it, all right? So anyways, guys, I'm glad to see that most of the coins that I'm in, they're all in the green in the double digits today, right? All right. I hope that this video helps you guys understand how we use the Bitcoin dominance, how we use the trend analysis on top of the Bitcoin dominance, and then how I make the decisions of what I'm going to buy, of when I buy or when I sell based on that information. Because I want to share that with you, and I use that Bitcoin Cash and I use Tezos as an example, right? I did that on purpose because I noticed that a lot of people that do technical analysis online, they just tell you like, oh, I think this is going to do this, or I think it's going to do that. Man, don't fucking tell me what you think it's going to do. Tell me what the action that you're going to take based on the analysis you just did. So now you guys know the action that I'm going to take, okay? If I need the money on Tezos at the end of the month, right, to pay some bills or buy some stuff for my family, then those two events have to happen for me to sell the staking rewards and take profits on it. On the Bitcoin Cash, if it goes up to that level and I need the money at that time, right, that would be the time that I would sell, okay? I hope this video benefits you guys and helps you guys out. And then if you guys have any questions or comments or suggestions for a future video, go down to the comments below. And if you guys haven't yet, make sure that you guys go to the cryptocurrency.market/blueprint and get you a copy of the cryptocurrency investing blueprint. This is the absolute best training program that I know of on the market. We created it. Go get you a copy of it. Stop jacking around, stop screwing around, trying to figure it out on your own, right? Go get you a copy of it. It's a recording of this 4-day cryptocurrency investing bootcamp that we did for a bunch of people, right? And in this program, we share with you guys everything that we possibly know about cryptocurrency trading and investing that allowed us to become millionaires and retire early, okay? There's no guarantee that if you study the program that you're gonna become a millionaire also, but it'll definitely increase your odds and your probability. That's for damn sure, all right? Thanks for watching this video, guys. Make sure you follow me on Twitter at HeyTaiZen, and I'll look forward to seeing you guys in a future video. And by the way, this first Shark Tank guy, Kevin Harrington, he is definitely as energetic as you see him on TV in real life, okay? So thanks for watching this video, guys, and I'll see you guys in a future video. Thank you.